Right. If you've already won a teddy in the past, you can't play. First person to shout out the equation for expectancy. Come on, I ask you this every cuddle. Come on, you should know this by now. Wait, have you won a teddy before? Okay, go for it.
Average losses divided by average winners?
No.
R value times win rate?
Sorry?
R value times win rate? So like the amount of times that you
No, it's not the equation I'm looking for. Come on, one person needs to tell me expectancy equation. You cannot call yourself a trader if you don't know what expectancy is. God, I've done such a shit job. This is not a reflection on you, this is a reflection on me. We're going to have weekly tests. Okay, I'm going to lower the threshold here. What is the easier equation? Ah, shit. Right, as penance, no one's winning a teddy. So it's the probability of your wins times your average win minus, that's B, probability of loss time, as in your hit rate basically. It's your hit rate, your positive hit rate times average win, negative hit rate times average loss. And that's, yeah. So that,
by what you win,
yes.
and then by how often you win.
So this is the proper equation. The easier equation, which is when I was lowering the threshold, is what's your average R divided, oh no, just average R, yeah. Average R, so your total R divided by the amount of trades is your average R, which is technically expectancy. So, yeah. So just a little tip, if you want to win a teddy bear in the future, just take a screenshot, because at the next cuddle I'm definitely asking this, okay? And it will be the first person that, right. Let's talk about expectancy in a way that we haven't really talked about it before. Let's look at it in the real world. So, like with anything, I have perpetual seesaws going on in my head. And let's say I'm a game master, and I go, Elisa, oh, you're now playing. You have two options. You either have 10% chance of winning £1 million sterling, or would you like 100% chance of 75k? You have 5 seconds to choose. 4, 3, which one? 100%?
10%.
10%. You've only got one shot at this game. Really? You lose. Okay. So, do you know why you've lost?
Yes.
Yeah. So, it's sort of a trick question, but it also isn't. The reason why she's lost is because she's got basically 1 out of 10 chance of winning, which means if you've only got one shot at the roll of the dice, you're most likely going to lose. And so in this occasion, I would have chosen the 100% chance of winning 75k. There's no risk there. But you got basically 90% chance of losing over here, even though it's slightly higher in value. Well, it's a lot higher. But what is the maths behind it? So this is where expectancy comes in. Sorry? Yeah?
Well, basically, you're guaranteed 75 grand. If you played the million thing 10 times, you'd have to play 10 times to win $1 million.
Correct.
So you would need 75 grand to be more than 100 grand to make it worth the gamble.
Yeah.
Because basically, it's like you're betting on red or black, 50-50 chance.
Yep.
But you're getting odds of 1 1/4 rather than 50-50. So the
Yeah.
odds aren't in your favour, so you wouldn't place that bet.
Yeah. And also you've got 0, which is green. So it's never 50-50 on that. But yeah. But really, what I'd like you to be doing, and I do this in real life, by the way, when I'm doing business decisions, I look at expected value. So I treat it differently than trading expectancy. I do this equation not in my head, I have to get my phone out. But so the equation you should do is 10%, so 0.1, times the value, which gives you 100k. You do the same equation over here, so it's 1 times 75. Now, whoa, back we go. So, but you can't just go, oh, 100k, let's do this one. The frequency is actually the main variable here. Like Mark correctly said, if you had, let's say, 10 chances, yeah, definitely pick this. But in everyday life, you're not often in a scenario or an arena where you have lots of rolls of the dice constantly. So what frequency does it make sense to take the 10% option? Now, you could work this out mathematically, but a rule of thumb is basically when you have a constant stream of decisions, like always, that is when you should apply the maths, i.e. trading and poker. So poker players, is all about EV, expected value. And with trading, because we are placing a lot of trades constantly over many, many years, we need to basically adhere to expectancy, which is why I'm obsessed with my log. And yeah, so frequency is the key thing. Now, let's do this again with the slight twist. All right, I'm going to pick on someone else. Aaron, you have a 20% chance. Sorry, new Aaron, not old Aaron. Where's old Aaron? Old Aaron's buggered off. Oh, no, you're there. Sorry. I can say old Aaron's buggered off. You have a 20% chance of a 50x or 90% chance of a 10x. I can see the maths in your head. It looks like this. I see Carl's got the calculator out. Yeah.
How many times? Only one? Only one?
Yeah, one shot.
Okay, then the 20%.
You're going to take the 20%?
I think so.
Okay. And who else would choose this one? One roll of the dice. Okay. Okay, and everyone else is choosing 90%? Yeah. Yeah. Personally, I would take this as well. If it's one roll of the dice, I'm not messing around, I'm taking that. I don't want 4 in 5 chances of losing.
It's not gambling if you can't lose something.
Yeah. So
this is X though, so you are losing something.
What do you mean?
Well, you've got a 9% chance of 10x, so 10 times whatever you're putting in. This isn't like I'm going to give you £1 million. This is
a 10x of whatever you're putting in.
So you are losing out.
Yeah. So this is where it sort of spills over into spot crypto investing, doesn't it? So for the average Joe, yeah, maybe a 90% chance of a 10x. Yeah, just put it in Bitcoin and sit there and do it, because that's your one shot really for the average investor. Whereas people that can time it potentially better, like us, we always like to think we can time things better. As you know, I always get it. I'm always early, always premature. Maybe this is a bit better suited. So when you work out the maths, this is all I'm really trying to prod you in the chest here is I want you to learn the maths. So the maths is 0.2 times 50, which gives you that. Now you're probably thinking, oh, it depends on how much money you're putting in. It doesn't. If you put 10 grand in and you times it by 50, then times that by 0.2, still ends up with that, or the equivalent. And so the maths here is 0.9 times 10. And therefore the answer is 9. Now this is basically close to the same, right? 9 or 10, but you're most likely going to win here. So definitely one shot, do this. Now, let's change the stats a little bit. What if this side was a bit juicier? Let's say it's a 60% chance of a 50x. Who's picking this side and who's picking, hands up who's picking this side? Okay? Hands up who's still picking this side?
It's a one-off.
One off.
Yeah, I'll switch.
All of a sudden, this changes a lot. This is now 30 against 9. And it's a 60% chance. Again, the tenuous link here is Casper. So I think you get the gist of today. So yeah, the tenuous link to EV and one-off spot trading, I think it's this. However, going back, this is being pessimistic. I see Casper as not a 60% chance that it's going to 50x. Personally, I see this a lot higher. I think it's more like 75, 80%, which, by the way, worries myself, because whenever you get crazy convicted in something, you've got to check yourself before you wreck yourself. Ice Cube. So, yeah, this is just a random thing. So, and let's go into the value versus price. So I went through this bit on a trading pub on the one that didn't record the sound. So if you saw this, sorry. If you haven't, it's worth going through. So I'm obsessed with value versus price, and I always have been, even before I got into business, but more so when I get into business, especially with M&A, because I like buying and selling shizzle. So if you have a limited company, and let's say it's a SaaS type business or something with recurring revenue, B2B, let's say, it's doing 100K per year profit. In this particular industry, let's say the average exit multiple is 5 times. So 5 times EBITDA or EBIT in a SaaS. The value of this business is 500 grand, right? This is what this business is worth, right? But what is the price? See, this is the easiest way I can convey value versus price. Because yes, it's worth 500 grand, but what price are you going to pay for that? If I'm going to have to pay 500 grand to buy this company, I'm not going to do it because it's a shit price. Yes, it's worth 500 grand, and yes, my 500 grand will be buying something which is worth 500 grand, but there's no deal there. There's no delta V. So I'm obsessed with the delta, the difference, the delta value, delta V as I call it. So I may be convinced that, yes, I definitely want this business, it's good, it's recurring revenue, all that sort of malarkey, it's definitely worth this, but what price am I willing to pay for this? 400 grand? Yeah, depending on your risk appetite really, but for a business, you want to be paying as little as possible, as close to $1 as you can, or £1 as you can. So let's say I bought it for 100 grand. The delta V here is 400, right? That's a good deal. 100 grand to buy something for, I've got 50p here. Who wants to buy this for 10p? Yeah, most of you would. Do you want to buy this 50p for 50p? No, you wouldn't. So, all about delta value. And this is why I like M&A. I haven't done much recently because I've still got indigestion from 2015. As in business indigestion. I did too many things in 2015 and I'm suffering the consequences of it. Sorry, yeah?
Will you put in M&A stuff on WAP?
Or some of it already is in the WAP, but I could possibly do more. My concern about putting, I guess, advanced business, if that's a wanky way to call it, is that most people doing the WAP for the first time have never run a business. So to go from no business experience or business knowledge, then going straight into M&A, I think personally is very risky. And this is why when I see YouTube or Facebook adverts of no money down deals, buy business today, blah, 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 for £1, I'm like, oh my God, that person's going to get slaughtered. Absolutely slaughtered. Because the moment the business starts not making profit, that person's going to have no clue of how to turn it around. And I know what I'm doing, and I still fuck up all the time. So for someone that's never been in business, it's going to be a lot harder. So that's why I'm reticent to, no money down deals. Technically you can. So
establishing a value that's not 50p is easy. 50p, I'll give you 10. Great, I've made 40p.
Yeah.
But establishing the value of a business or something that's more intangible.
True. So the global
That difference then.
The global average is 3.3 times annual profits. If you take all small businesses, the average is 3.3 times yearly profits or EBITDA. But it depends on country, time of the economic cycle, the industry you're in, and a few more variables. So for example, right now I've seen a mass drop in retail exit multiples. So if you go back from 2013 to 2020, retail businesses like My Fairy Pen Pal, etc., they had really good exit multiples because it was so easy to sell to the retail market. I remember back in the day, I'd pay, let's take the realistic trader. I could go on Facebook ads, spend 200 quid in ads, and get a new RT member coming in for, I don't know, whatever the price was. It was easy, so I was like, okay, I'll just put more money in Facebook. But now, because CPA, cost per acquisition, has just shot up crazily, you've got to make sure that your business can actually afford the increased marketing costs to make it worth your while. So what's happening is that, and also with tech increasing, so AI tools, all that sort of stuff, the barrier to entry to setting up a brand new business is so low. It's like the easiest time in history to set up a business right now. And therefore, the exit multiples for retail-based businesses have just dropped off a cliff. And there's just not that many buyers at the moment. Whereas B2B businesses, the exit multiple has been quite resilient. So, and here's the other thing. If you take, on average, recurring revenue businesses, so people that pay a direct debit, or you've got proper contracts, like big like B2B contracts that have shown proof that they have renewed at least 1 or 2 years, those recurring revenue B2B businesses, you're looking at 5 to 10 times EBITDA, 5 to 10 times profits. And again, it depends on your buyer. If you have a trade buyer, as in you're selling your business to someone else in the same industry, you have a lower exit multiple. But if you're selling to a PLC, it's then not even done on profits, it's done on revenue, typically. So like if you're selling to a private buyer or someone else in your industry, they'll buy you because from day one they want to make profits from the acquisition. But if I'm selling a business to a stock market listed company, they don't give a shit about the profits or your outgoings, etc. They're buying you for the revenue. Because if, let's say on average, your business is worth, I don't know, 5 times profits, for a stock market listed company, on average, their exit multiple is like, I think the average, global average, is 17 times rev. So they can come in and buy you out for, I don't know, 5 times revenue, and they still make instant profit on day one because their whole stock is valued at 17 times. So it's a simple arbitrage. And that's why I've got a whole bunch of mates where my best story ever that I heard was my mate who had an oil software company. Didn't deal with oil, it was like an oil logistics thing. And he said it was a really fancy spreadsheet. And he went in there, and he ran the business for like 15 years. It was like an oil shipping logistics software or whatever. And he was aiming for 10 times profits. And he was sat there in the room, and I think he said there was like 5 or 6 people on the other side, like all the the lawyers and stuff. And they said, "Oh, I'm sorry," his name. "I know you're expecting a bit better deal, but things are a bit tight. Blah blah blah. We got the I think it was back in 2009, 2008. We got the crisis. Blah blah blah. So unfortunately, we can only offer 20." And he was like, "Yeah, and 20 times rev." And he was like, "I'm going to have a little think. Do you mind if I just go out and make a quick phone call?" And he basically had to make an excuse just not go, "Fuck yeah!" So he said he gave it like 3 minutes just to cool his, and he then tried to haggle on something inconsequential. And they went, "Oh, okay, 20 times rev." He walked away with 50 million for a spreadsheet. So yeah, he's loving it. He still doesn't.
Is he still alive?
He's still alive. Yeah.
High tolerance.
Yeah. But on the flip side, a lot of people that then sell to publicly listed companies then quickly get a lawsuit because they see our risk to reward. So they're like, okay, yeah, we'll let's say I'm a shitty PLC. I'm going to buy this tiny company, whatever, and then we're going to just file a lawsuit against them, knowing that all of a sudden, the risk to reward of defending this lawsuit, and they recoup a lot of the money back from lawsuits. Honestly, it's really shitty. I know a lot of people that sold out to a PLC only to be then sued like within a year, knowing that you're just settled because you haven't got enough money as they do. Anyway, going back to this, delta value, that's what you need to be obsessed with. What is the value? So you need to spend a lot of time coming to a considered resolution of what the value of something is. And then it's a different question of when am I going to get in? What is the price I'm happy to pay? So when you're looking at Bitcoin, obviously we have these 4-year cycles, etc. Personally, I think this next coming cycle is probably the last cycle. Now we've got institutional money coming in. It's just going to be a lot flatter and more subdued over time. But I think Casper is going to do something similar to this, except the Casper cycles are going to be much quicker. We've seen this. We've seen cycles being compressed into months. Bitcoin will have the 4-year cycle. I think the equivalent 4-year cycle for Casper is like 5 months. It's really compressed. So in the short term, when I'm looking at Casper, my pessimistic view is 20 cents by December. So that's my key mental model at the moment. And if that mental model is satisfied, I believe $2 to $5 by December 2025. But I'm ignoring the $2 to $5 level until this one is ratified. Now, so when you're looking at the short-term value, I'm like, okay, so what is the short-term value? 20 cents. Okay, that's the value per Casper. In my mind, my highly considered, educated valuation by December this year, 20 cents. Cool. If I genuinely believe that, and then you have to add your own probability to this, going back to expected value, what is the probability of this? At the moment, I'm sitting at 75% probability. So I then do the EV, well, not in my head because I'm stupid, but on my calculator, and then I go, okay, yeah, I'm happy with this. So now I move on to the next question. What price am I happy to pay per Casper? Or per Cas, that's the token. Sorry, not a token, it's a coin. Well, holy shit, I'm happy to pay 2 cents, 3 cents, 4 cents, screw it, 10 cents. I'll pay 10 cents for a 20-cent Casper. Because if I'm correct, it's not going to be 20-cent EV, it's going to be $2 to $5 expected value. So, and this is, again, trying to bring it back to crypto and whatnot. And then obviously you can do all the fractals. I mean, this fractal is, so that fractal there is the blue line. So, and by the way, this fractal is 2014 to 2016 when the hash rate was very similar to the hash rate of Casper right now. Whoopsie daisy, back. Ah! Wrong button. Yeah, so when you superimpose that price action on Casper right now, it's been pretty damn accurate, hasn't it? And the interesting thing is how a Bitcoin, it breached its all-time high, had a nice pullback, probably shat everyone up, and then went, see you later. We're having that shit situation at the moment. The last couple of days, everyone's been like, oh shit. So, yeah, so far, similar-ish. Now, I've never been a fan of fractals until recent years, but I am looking at them a bit more because a chart is really the visualization of all human participants and their emotions. Basically, that's what a chart is. And when you're looking at the fractals, if you mislabel one, you could get hurt. But looking at this, I mean, technically, I think it's hard. I mean, every time I do this, I come to some different label point. Now, did you watch this video I put in Telegram? I put a video in Telegram yesterday. I don't need to play it. Cool. It's in Telegram. Watch it. I was basically saying how, if I fast forward, please watch the videos I put in Telegram if you don't. Yeah, so I was in my mode of, right, how am I wrong? Which is, I'm always looking for the crocodiles of Casper at the moment. And then I was like, what if I've mislabeled one of the fractals? How can I label Casper as bearish as I possibly can? And I came to this conclusion, where you had, 1, 2, so dead cat bounce, 3 for the double bottom, 4 into sort of the meltdown, or as in the Kobo really, 5 into a blow off top with a double top, and then bugger off. Now if I fast forward, 6 for a fake blow off top, 7 into the blow off top, right? And so in the bearish scenario, I was like, okay, well, let's just copy that fractal moving forwards. So, We got, yeah, 1 dead cat bounce down into the double bottom, 4 to pull back down to here, as in the Kobo of the double bottom, 5 to the double top, down, spring, etc. And then, wait 1 second, you'll see in a sec. So, is this the next fractal? This is the most bearish take I can have, where shit, this blow off top to 5 cents is actually the beginning of this fractal down here. So could this be the situation? So if that does happen, what we're looking at 2.5 to 3 cent Casper. That, is that the end of the world? No. I mean, if you're just a hodler, then it's like, okay, fine, another buying opportunity. For myself, because I got my eggs, if I just held throughout that, it's no biggie. I'll just show a massive floating loss for that, however long that 1 or 2 months. But is it going to zero? No, it would likely be a double bottom and then springing. So causing another inverted head and shoulders, just like it has been before.
So you still think it will go to 20
Yeah.
cents from down there?
I think there's a lower probability that will play out. And I can't. Honestly, this has been on my mind like multiple times a day, every day. Should I sidestep, or can I even sidestep? And I can't. Now, the other day I bought 100 grand's worth of CAS, and it didn't move the price, and I was like, thank God. So more volatility and ADV is increasing, so average daily volume is increasing, which means, whereas before, I've been doing loads of tests. So if you go back a month beforehand, the same 100 grand order, I didn't press all in at market. I did space it a bit, but it did move the price a bit more. But now it's not even budging it, which is amazing. But the CAS pot is quite large, so I can't sidestep. Even with ADV growing, I still can't sidestep without harming the price. And then there's the other morality of if I sidestep, I basically shit on all of you. Or anyone else that has CAS, I'm like dumping my CAS or dumping the price, and then so.
I'm not in yet, so please.
Yeah, and then I got this morbid thought of like putting all the CAS onto Mexi, and then going sell all at market, and just watching them bigger spot. Yeah, I'm not going to do that, but yeah, just for entertainment.
Do you prefer fractals over like Elliott wave theory because they like the logarithmic value on?
Yeah, and you should, as a rule of thumb, only do fractals on log charts, especially with anything in its early stage and in an exponential growth. Yes.
You can't stop some shitty guy doing that.
Exactly. So that's the other thing. Why sometimes fractals and other patterns can be ruined if someone was just like, oh, I'm scared, dump sell.
Or intention.
Yeah. But recently, 3 days ago, someone put $7 million worth into CAS. Someone I've been tracking it. It started off with a 2 mil buy order. Cool. 4 mil, because I track the whale increase. The amount of whales are increasing. So all the wallet sizes are increasing. But this wallet now, last time I checked, was $7.5 million. Now, I don't know, is this a whale or is it an exchange? Could be either. If I'm Binance about to list it, I need a big float. Now I'm sorry.
Just Bitmain.
Bitmain. Could just be Bitmain actually. Yeah.
Or Josh.
Oh yeah, or Josh. Yeah.
I mean, I've been mining it for 7 months.
It was Josh who put me onto CAS. So yeah, and I thank you. So we're playing COD. See, some.
I'm suspicious.
Yeah. So yeah.
Do you think there'll come a point where the miners will tank it if
No.
someone tries to get out?
Originally that was my main concern, that all the KS3s will be coming out. The hash rate, the difficulty rate will be shooting off, the profitability of that purchase of the machine will then be not as much, and therefore they'll just dump the price to recoup losses. But with more research, I've come to the conclusion that a lot of these KS3 purchases, as in these big miners, they're not buying one. They're filling a warehouse or a room of this size full of KS3s, so they're proper businesses. And I think and if they're in that business, they're also experienced crypto practitioners. And I think they can see the value of CAS, and so they'll probably sell a bit. And also, as the price has been pumping, they have to sell a lot less CAS to recover the 50 grand cost. I mean, how much is a KS3? $47,000, yeah. So they don't actually have to sell that much. And what are they making per day? How many CAS per day?
It's $890 revenue per day today.
Yeah, so they don't have to sell much CAS just to break even on the KS3. So I think, yeah, when Binance is listed, or lists it, or whatever, I think we could see a bit of a sell-off, but I don't think it'll be much.
So
Oh, yes?
why should a fractal work based on a 4-year halving on something that's got an annual halving that's over 12 months? I mean, it's a totally different model.
They are, which is why I'm really egging to try and get this stock to flow model for Casper. Now, in theory, so the last Bitcoin is mined in the year 2140, and it's got these big, sluggish 4-year cycles, as in the 4-year halvings, and therefore that's why the stock to flow is chunky. It's like this, and so, and I've always thought, okay, the last CAS is mined in 2037, so it's a faster emission cycle. It loses something like 100 CAS per block every month, and it culminates in a halving every year. So the stock to flow should be a lot smoother, and therefore the cycles, if there are any price cycles, should be a lot more condensed. So this is why I found that the 12-hour chart on Casper rhymes very well with the weekly chart on Bitcoin. It's just coincidental. But the reason fractals work is humans never change.
Well, that's what I was thinking. Is it actually expectation of traders?
It is, and it's game theory. Everyone's looking at massive support levels, going, oh, fractals, it's always bounced from this support before. I'm going to go all in on here. So guess what? People do the same. And this is why when people, base support breaches, everyone goes, oh shit, what happens when base support breaches? It dies. Let's just sell. Shit, I'm late. Fuck it. I'm selling anyway. And so people never change. And also in all markets, it's not just public versus banks. There's a whole bunch of different entities from, the general public. Then you got your bigger mini whales, for all the way from shrimp to humpback, basically. Sorry, where was I going with this? So, long story short, the worst outlook I could find is if I labeled the fractal like this. So we could have a couple of months of dumping down to 2 to 3 cents. It's no biggie, so long as you can stomach floating losses. Now I can you? You have no idea how often I get people texting me, tearing their hair out. Honestly, and I say this with love. You just gotta, Moving on. So,
Sorry, quick question
yeah.
with CAS. At what point, God forbid, it went really down,
Well-
would you start getting worried? Because given the amount you've put in, worst case scenario, when would you be like, oh,
Base
shit.
support breach.
Okay.
If base support breaches, you can guarantee I'm out. I always get out. Like, going back, I know I always say this, but with Olympus DAO, I was massively into Olympus DAO in 2021. Like, I rode Olympus from like $400 up to $1,300, and all of the rebasing payouts on that. And I was obsessed with it. I knew everything about it. And that's why, probably every 2 years, I find something which just resonates, and I go, oh shit, I need to get all in on this. But when Olympus breached base support, it dumped down. I was like, oh shit. And then I was like, all right, I'm getting out on the pullback. And it pulled back to 850 or 950 or 850, I can't remember. And I told everyone, I was like, I'm selling all my own, guys, I'm out. Even though I loved it, and I loved how much, there was a point I was making 25 grand a day for 6 months. It's just ridiculous. I was that much in love with it. And then I was like, oh, selling. But it then went down to $10. So no matter how much you love something, or no matter how emotionally connected to something is, don't ignore the base support breach. If CAS broke this support, I'm out. So, and I will take that haircut. But I still meet people that have $10 ohm still in their wallet. It's more like a stable coin these days. It just goes sideways. So this is what I actually think will happen. Because historically, when you look at this, you nearly always see, yes, there are a couple of double tops along here, like here's one, etc. But from a pure price action point of view, whenever you see an all-time high breach, you'll always get a Kobo of some sort. And Casper has historically always done a double top in terms of the Kobo from when it breaches an all-time high. So I think it's going to do something like this or just bounce off this level. And also when you draw, if you just look at the chart and just draw that trend line, what it's done is that it's made a lovely halo. Let's just get the chart up so I can show you. There we go. So this is a key support level. So yeah, that's the day. I prefer the 12-hour. There we go. Look at that. Nice 12-hour halo, boom. So yeah, this could probably just trickle up here for a bit. But again, I'm watching like a hawk. And I'll be the first to go, I was wrong, I'm getting out. So.